Hi, my name is Kevin. I am the manager of Behavior Shift, a fee only registered investment advisor here in Southern California. I've spent years helping individuals and families navigate their financial lives through comprehensive planning. I continue to hone and sharpen my skills as a financial planner. I've pursued education, certification, so on and so forth. I'm saying that not to boast, I'm saying that so you can be assured that what I'm telling you comes from experience, from knowledge, from other people's wisdom, and ultimately the source of all my knowledge comes from God and what I learn, the convictions that I have through reading His Word. Today, I want to walk you through something that is often misunderstood: financial planning. Before we begin, a quick but important disclaimer, and I want to read this. This presentation is for educational purposes only. It is not individualized investment, tax, or legal advice. Every financial situation is unique, and decisions should be made in consultation with your own qualified professionals after reviewing your personal circumstances. With that said, my goal today is simple: to help you understand what financial planning truly is, what makes it comprehensive, and why comprehensive financial planning is crucial to long-term financial stability and to build stability and confidence. Most people, especially now in 2026, we don't lack information. We have a phone that is in our pocket that is accessible by hand, and it's super easy to engulf information nowadays. So it is not a lack of information that people have as their problem. It is a lack of a comprehensive plan. And that's exactly what we are going to explore together. Let's begin. Before we go any further, let me tell you exactly what you'll be able to do by the end of this presentation. First, you'll be able to define comprehensive financial planning, not just a surface level definition, but a clear understanding of what it actually means. So if you need to pause at certain points or repeat it, rewind it, that's okay. I want you to have a clear understanding of what it means. You'll be able to distinguish between transactional financial advice, like selling an investment or insurance product, and true comprehensive planning, which integrates your entire financial life into one coordinated strategy. Second, you'll be able to identify the core domains of comprehensive financial planning. We'll walk through the major areas that must be addressed in a real financial plan, from cash flow and debt management to risk management, tax planning, investments, retirement, and estate considerations. You'll see how each of these domains play a role and why none of them can stand alone. And lastly, you'll be able to explain why comprehensive financial plans create better outcomes. This is where it all comes together. You'll understand why financial decisions made in isolation often creates unintended consequences, and how integrated planning process like a comprehensive financial plan reduces risk, improves clarity, and increases long-term confidence. By the end of our time together, you won't just know what comprehensive planning is, you'll understand why it matters. Let's start with the problem. Most people don't have a financial plan. To add to that, people isolate from financial counsel, whether that's shame, guilt, fear, cost, whatever the reason is, we tend to isolate from financial counsel. Think of a flock of sheep. In isolation, the wolf can easily pick off a sheep. Today, it's very easy to get general advice. Pull out your phone, you scroll on TikTok, YouTube, or Instagram. You can ask ChatGPT, Grok. You can set up a meeting with a big box firm advisor, talk to an insurance agent about coverage, talk to a CPA or a tax preparer for about taxes, an attorney about estate documents. But here's what often happens. The guidance can be a bit scattered, it can be all over the place. The guidance is often focused on one aspect. So not only can it be scattered all over the place, it could also be often just focused on one particular topic. Recommendations are product driven rather than client centric driven because of quotas, commissions, whatever the case may be. And that that's another isolation piece that can cause more harm rather than help. So again, recommendations are product driven rather than client centric driven. There's no integrated plan connecting investments, taxes, insurance, retirement, and estate decisions. There's little to no long term accountability. Many advisors would hide behind another professional. For example, if you're a financial advisor dealing with investments, many would say, talk to your CPA. Or if you're talking about estate planning, talk to your attorney. It's it's often hard to do planning that way, and there are reasons why they say that. It's because of liability. So individual transactional financial advice is often it often leads to no long-term accountability, and rarely is there meaningful coordination between professionals like I said, a tax preparer or CPA, an insurance agent or the attorney and the financial advisor. All of them are talking to you with their individual strategies, and they're not coordinating. It can lead to decisions being made in a vacuum, meaning financial decisions are being made without context, without coordination, and without considering their impact on the broader financial picture. For example, a tax decision might not think about how it affects investments. An investment might be picked without considering what it means for your estate. And an insurance policy could be bought without looking at how it affects your overall money flow. Each decision might be good on its own. They can be amazing recommendations, amazing advice on its own. But without a cohesive plan, without a comprehensive plan tying all of those together, even good advice can lead to poor outcomes. I'm going to say that again. Even without a cohesive plan, if you don't have a plan that's directing your decisions, even good advice can lead to poor outcomes. That's that comprehensive financial planning is designed to address. Imagine this. Here's an example. Imagine a married couple in their mid 40s talking with a financial advisor. Maybe they're entering their peak income years, meaning they're earning much more money and they're not spending as much because they've already taken care of some of the things earlier in their life. So now they're making more money than they could ever imagine. And now they start asking, what do I do with all this money? And they start talking to a financial advisor. Then they tell the advisor that they've got some extra money in a savings account that's not really growing. Maybe it's a CD or a high yield savings account. The advisor then suggests investing that money in a certain portfolio because that's what that financial advisor is paid to do. Maybe they're selling a specific mutual fund or a certain strategy that's provided by their firm. Then this advisor points out that considering their age and how much risk they are comfortable with, they should split their investments between stocks and bonds. The portfolio might be a good fit, and the advice might seem sensible. It can be a good it can be a good advice, it can be a good strategy, it can be a good fit for the client. But here's where it gets tricky. If the advice stops there and the advisor doesn't ask other questions, it might leave some information off the table. For example, let's pretend that the advice does stop there and it's just the stock bond portfolio that the advisor recommends. The advisor then neglects to to see that this client, they haven't put together a complete emergency fund. They're still paying off credit card debt with high interest. They haven't checked if their life insurance is still covering them properly. They haven't updated their estate plan since their second child was born. They're not sure how they'll get their retirement income sorted out in the future. So all of these things create uh, they is not solved. All of these things are not solved by that one advice that that advisor gave. The advice was all about investing the extra cash. And again, it may be good advice. The advice might seem sensible, but it didn't take into account everything else that they're doing financially. That's advice that's just about one thing. It's like fixing a symptom without looking at the whole problem. Before we define financial planning clearly, we need to clear away some misconceptions. The first one is this: financial planning is just investing. I've heard that many times, and maybe you've heard that too. Maybe you believe that. And I would tell you that that's a misconception, gently, kindly, respectfully. Many people equate financial planning with managing a portfolio, stock bonds mix with some alternative assets here, with some crypto here. But investing is only one piece of the financial picture. A portfolio without coordinated tax planning, cash flow management, insurance review, and estate structure is incomplete. Second, the second thing that I often hear: I only need a financial planner when I'm close to retirement. Planning isn't a retirement event, it's a life process. Think of the many touch points that you will go through: marriage, finding a career, children, education, so on and so. Those are just a handful of examples, but financial planning involves many touch points. It's a life process. The earlier financial decisions are aligned properly, the fewer costly adjustments need to be made later. And the Bible clearly tells that we are to steward the resources that we've been given, not just in retirement, but today, right now, at the present moment, we are to steward our resources. Third, if I make enough money, I don't need planning. Income does not replace strategy. In fact, higher income often increases complexity: more tax exposure, more decisions, more risk, and more opportunity costs. One thing that I've been learning with taxes is this: don't pay too little, don't pay too much, just pay the right amount. So you are not more American than I am. You're not more patriotic than I am if you paid more in taxes. And there are strategies for you to um, plan around those taxes, not to avoid them, not to evade taxes, but to pay the right amount. And more income, again, introduces more tax exposure, more decisions, more complexity in your financial life. Fourth, budgeting is financial planning. Yes, budgeting is financial planning, but it's not all financial planning. Budgeting is a tool. Yes, it is important, but it's just one component. Just like the investment, it's merely one component of financial planning, albeit that budgeting is a super important part of any financial plan. Financial planning goes beyond tracking expenses. It coordinates long-term decisions with short-term and across multiple domains. And finally, the fifth misconception that I often hear is, I'll figure it out as I go. This is probably the most common approach, but financial consequences compound over time. They get bigger and bigger and bigger and bigger over time. Delayed planning often leads to inefficiencies that could have been avoided with intentional planning. Most people aren't reckless, and I understand life gets hard. And so I think, and I still believe this, that most people, you that are watching, you're not reckless, you're not irresponsible, or you're not intentionally neglecting your finances. Some do. I pray that that's not you. And if you know somebody that is intentionally neglecting their finances, help them. Whatever you're learning from this video, share it with them. Instead, most people often misunderstand what financial planning truly entails. That's precisely what we're here to clarify. So, what is financial planning? At its core, financial planning is the process of considering your financial objectives and creating a roadmap to reach them through intentional money decisions. That's the simple definition. Let me read that again. At its core, financial planning is the process of considering your financial goals, financial objectives, and creating a roadmap to reach them through intentional money decisions. That's a simple definition. But let's go a little deeper. The Certified Financial Planner Board, the CFP board, and they're a known organization within the financial planning realm. They define financial planning as a collaborative process that helps maximize a client's potential for meeting life goals through financial advice that integrates relevant elements of the client's personal and financial circumstances. Let's focus on a few important points. Financial planning is collaborative. It's about working together. It's about working together with a professional. Financial planning has life goals. We'll align your financial plan with what you truly want. It integrates, will make sure that everything fits together smoothly, or a financial plan uh, makes sure that everything fits together smoothly. Personal circumstances, financial plans considers your unique situation. Financial planning isn't just about getting advice. It's about creating a plan that works for you. It's not just about giving you advice, it's about making sure everything fits together. It's like putting on a glove, putting on the right glove and it fits like a glove. But if you put on the wrong glove, meaning if you have a left-handed glove and you put it in your right hand and it's all awkward, it doesn't fit. Financial planning ensures that it is a fit plan for you, for your situation. Academically, personal financial planning is seen as the process of putting together, putting into action, and keeping an eye on your financial decisions to create a plan that helps you reach your goals. There's a theme here. It's creating a plan for your goals, creating a plan for your goals. In a nutshell, that's a very simplistic definition of it. Create a plan for your goals. So, financial planning is not a one time thing. It's something you do regularly to make sure you are moving forward. If we combine all these definitions that I've mentioned, financial planning is a collaborative, ongoing process that integrates your financial decisions into a coordinated roadmap designed to help you achieve your life goals. It is strategic, it is intentional, and it is collaborative. So the next question becomes, what makes financial planning comprehensive? Comprehensive financial planning integrates your goals, investments, retirement strategy, cash flow, savings, debt, insurance, taxes, and estate decisions into one coordinated plan. Let me list that off again. It integrates your goals, investments, retirement strategy, cash flow, savings, debt, insurance, taxes, and estate decisions into one coordinated plan designed to protect, grow, and ultimately distribute your wealth effectively over your lifetime. The key word there is integration. Comprehensive planning doesn't look at one area of your finances in isolation, it connects everything, it connects all the dots. Again, that list includes cash flow and budgeting, goal planning, debt management, risk management, tax planning, investment planning, retirement planning, and estate planning. All of these have different strategies within them, but it connects it collects all of it and turns it into one strategy for your circumstance. Each of these domains matter on its own, but comprehensive planning recognizes that they don't operate independently. A tax decision affects investments. As a matter of fact, taxes is it plays such a big part in on all of your finances, from your income, from your investments, from selling assets, from estate, how you pass that on um, to your legacy. Tax is super important within a financial plan. An investment decision affects retirement income, debt structure affects cash flow, insurance affects estate outcomes. When we plan well, we make sure these areas work together, not just separately. This collaborative and comprehensive approach helps keep families steward the resources that they've been given. So, how do we provide comprehensive financial planning at Behavior Shift? Now, we're kind of, as we're drawing to a close here, we talked about what financial planning is. We talked about what comprehensive financial planning is. How do we connect that to our firm? What is the business that I am in? Here's what we do. We anchor biblical principles to each financial planning domain. So, Christians, so you have a systematic way to steward the resources that you've been given. I say that again. We anchor biblical principles to each of those financial planning domains so that you have a systematic way to steward the resources that you've been given. We see money as a tool, not the end goal. And we must steward with a plan. Money is merely a tool that we are able to use to give and serve others. The plan that we've created, the framework that we've created, we've given it a name. It's called Steward, and it's an acronym. The Steward framework helps you organize your financial planning in a clear step by step way. Actually, not a step by step way, more of, hey, these are the principles, and you need all of these principles within your financial plan for it to work, for it to be comprehensive. It's We're not waiting for one step to finish so that you can do the next. No, it's all of it working together at once at the present moment. So, first, we focus on setting the foundation. This is where we make sure everything is clear, your beliefs about money, what you want to achieve, and how you want to handle money. And for us, because it's tied to biblical principles, Jesus spoke a lot about treasures and possessions. We then seek his teachings for wisdom. Next, we focus on track and take control, tracking and taking control of what? Of your income, what goes in, what goes out, income and spending in that case. We help you get a better understanding of how much money you have coming in and going out. You can't take care of what you don't know about. Then we work on eliminating debt. We aim to reduce the money that you owe, which can make it harder to move forward and be flexible. And then we focus on wisely preparing. This includes saving for emergencies, managing risks, and getting insurance so you are ready for anything that and your plan stays strong. So far we have setting the foundation, tracking and take control, eliminate debt, wisely prepare. Next is accumulate wealth. So that we're at the STEWA, accumulate wealth. Here we look at how to invest and grow your money over time, making sure it matches your values and goals. Next, we focus on rooted through real estate. Now we're in the R. For many families, real estate becomes a stable part of their financial plan, helping them build lasting value. But most importantly, not just the financial impacts of real estate in your portfolio, but more importantly, getting connected to a local church. We are called to be members of a congregation to serve in both to serve and be served. Finally, we focus on developing a generous life. Because at the end of the day, taking care of money isn't just about getting richer, it's about making a difference, an eternal difference. Money is a tool meant to help you do kingdom work. The steward framework makes sure we cover all your financial needs, not just randomly, but with purpose and care. It connects what we believe with how we manage our money. That's how we offer a complete financial plan. It's not just about the numbers, it's about standing on a firm foundation, patiently waiting to give and serve others. I want to end this presentation with this. I just want to read Matthew chapter 25, verses 14 to 30. So join me as I read from Matthew chapter 25, verses 14 to 30. For it will be like a man going on a journey who called his servants and entrusted to them his property. To one he gave 5 talents, to another 2, to another 1, to each according to his ability. Then he went away. He who had received the 5 talents went at once and traded with them, and he made 5 talents more. So also he who had the 2 talents made 2 talents more. But he who had received the 1 talent went and dug in the ground and hid his master's money. Now, after a long time, the master of those servants came and settled accounts with them. And he who had received the 5 talents came forward, bringing 5 talents more, saying, Master, you delivered to me 5 talents. Here I have made 5 talents more. His master said to him, Well done, good and faithful servant. You have been faithful over a little. I will set you over much. Enter into the joy of your master. And he also, who had the 2 talents, came forward, saying, Master, you delivered to me 2 talents. Here I have made 2 talents more. His master said to him, Well done, good and faithful servant. You have been faithful over a little. I will set you over much. Enter into the joy of your master. He also, who had received the 1 talent, came forward, saying, Master, I knew you to be a hard man, reaping where you did not sow, and gathering where you scattered no seed. So I was afraid, and I went and hid your talent in the ground. Here you have what is yours. But his master answered him, You wicked and slothful servant, you knew that I reap where I have not sown, and gathered where I scattered no seed. Then you ought to have invested my money with the bankers, and at my coming I should have received what was my own with interest. So take the talent from him and give it to him who has the 10 talents. For to everyone who has will more be given, and he will have an abundance. But from the one who has not, even what he has will be taken away. And cast the worthless servant into the outer darkness. In that place there will be weeping and gnashing of teeth. Today we covered comprehensive financial planning. It is a way for you to steward the resources that you've been given. My question to you is, what will you do with this information? What will you do with the treasures that you have been given? And if you believe that God owns it all, and that Jesus will come back to judge the living and the dead, how will you be judged on that judgment day? What will you what story will you tell? What story will your actions tell? So, I leave you with this. What will you do with the information that you have today?